James. A fantastic performance by the Australian share market. And it was great to see a number of stocks on the Aussie market reaching a 52-week high. Often we talk about so many of those companies that have been losing money, but there's been plenty of stocks which have been performing well over the last year. And if we have a look at the types of stocks which are in favour, many of them are some of the high-yielding ones. In fact, financials in particular are doing quite well. We saw Commonwealth Bank reaching a 52-week high, Breville Group also hitting a 52-week high, CSL, Mirvac, James Hardie, Australian Infrastructure Fund, as well as Regis Resources. So all over the place. And if we have a look at the performance on the market today, I think the financials were definitely a highlight. We saw Commonwealth Bank up by 1.8%, AMP was up by 1.6%, NAB gained 1.5%. So financials certainly in the spotlight. Another stock doing well was Aquila Resources, up by a massive 8%. It got regular backing for its Anacatel iron ore port, so that was good news. But all up this week, it's going to be all about the central bank meetings. We see the FOMC meeting by the US Federal Reserve and the results out on Wednesday, where the market's going to be watching for any signs of quantitative easing. And then on Thursday, of course, the big one is going to be the European Central Bank, and market expectations are that it's going to announce something to do with bond buying of Spanish and Italian debt to bring down yields down to a more sustainable level. And then we're going to end off the week with one of the biggest economic releases for the currency and equity markets, with non-farm payrolls out of the US for July.
Do you concur with that? I mean, do you think that's what a lot of global equity investors are waiting for? Just start, piling in there if we do see some sort of positive announcement from the ECB? Well,
I think it started to already be priced into the market. So if we don't see anything, the flip side is that we could see some of the momentum that we've seen come into the market over the last session really disappearing once again. And the hopes are, first of all, that we will see a revival of the securities market program. And this is where the ECB would go on a bond buying program. But some of the estimates in terms of bailing out not only the Spanish banks but the regions are around about 650 billion euros at the moment, and that would really suck the funds dry out of the European Financial Stability Facility, as well as the European Stability Mechanism, which is to come into force in mid-September. And that's really why there's this talk of this banking license for the ESM, or the European Stability Mechanism, which will come into force, the ESM will come into force mid-September, so that the European Stability Mechanism can take the funds at its disposal and really gear them up a notch to be able to bail out some of these larger countries which are considered too big to fail. So a big event for the market this week, the European Central Bank meeting, especially given some of the comments coming out of the ECB at the moment supporting the euro, the eurozone. So a lot of expectations building in anticipation, and that's really why we've seen the rally on Friday as well as today.
Julia, what if they just at the meeting, the ECB meeting, they just talk about looking at it and doing something as opposed to actually announcing doing something? Would that be seen as a miss, and would we likely see a sell-off?
It's a bit of a double-edged sword. At the moment, it seems that the worse things get in Europe, the higher the expectations that we will see some sort of circuit breaker from the ECB. So I guess if we don't see anything, once again, we will probably see a rise in the 10-year Spanish as well as the Italian yields. And of course, Greece, they're supposed to be getting a 31 billion euro payment in mid-September as well. So that's being eyed. So things can very quickly deteriorate. But the funny thing is, as they deteriorate, expectations around a circuit breaker or a temporary sort of kicking the can down the road scenario is once again priced into the market. So a bit of a double-edged sword in that if things do get worse, the market's going to price in that the ECB will step in.